So, welcome to today's presentation. We'll make a start with the technical analysis. And what you're seeing in front of you is practically Nasdaq's 4-hour chart. However, before we make a comment on US stock markets, I would like to have a look at the Usd Index, which has been rising since the early European session today. Note the green candlestick here, which is quite interesting. I would be noting that the price action of the USD index has practically reached the 107.50. Make some slight readjustments here. So we see some bullish tendencies despite some stabilization over Thursday. And the market seems to be pricing in, or positioning if you prefer, ahead of the US employment report release for June. I would expect on a technical basis bullish tendencies to be maintained should the price action be able to break clearly above the 107.50 and start aiming for the 109.50. On the flip side, should the bears take over, the possible disappointment, say for example from the US employment report for June, we may see the price action of the Usd Index dropping, testing if not even breaching the 105.55 level. On the other hand, the RSI indicator remains clearly above the reading of 70, implying a rather bullish sentiment, yet at the same time may also imply that the index has reached oversold levels and overbought levels and practically could be ripe for a correction lower. Note that the price action has reached also, or tested if you prefer, the upper Bollinger Band here. Moving on now to the common currency, Euro USD, which is still dropping, actually tested also the 1.01. And give me a sec to make the corrections here, just to make the relative readjustments. There we go. Now there is a clear downward movement, despite some stabilization here, and we controlled it. But overall, we tend to maintain our bearish outlook as long as the price action remains clearly below the downward trend line. I would be making it a little bit more clear here. And should the bears maintain control over the pair, we may see practically Euro USD breaking the support line of 1.01 and start actively aiming for the parity level at the 1. It's impressive how fast the common currency has practically reached parity level with the US dollar. Should the bears maintain control or even intensify their efforts, I wouldn't be surprised to see the price action of Euro USD breaking below parity level and actually starting to aim for the 0.9870. A possible strong employment report showing solid employment data for the US employment market for June could actually intensify bearish tendencies for the Euro USD, pressuring the pair lower. On the flip side, should the bulls take over, given that the RSI indicator remains below the reading of 30, which on the one hand, yes, definitely shows some bearish tendencies. On the flip side, though, may also imply that the pair is oversold and could be correcting a little bit higher. Nevertheless, should the bulls take over, we would expect the price action to break initially the drawn downward trend line, but also break the 1.0210 and start actively aiming for the 1.0355. A stabilization or sideways movement could be achieved also between the 1.0210 resistance line and the 1.01 support line. However, that would imply practically that the price action would have to stabilize and at some point break the downward trend line drawn and flip to the other side. Let's have also a look at Gbp Usd. Now this is the weekly chart, shows a steep drop of cable. Let's drill down to the daily chart and now to the 4-hour chart, which shows us currently that the price action seems to be testing the 1.1935 support line, is about to break it. We tend to maintain our bearish outlook despite the correction higher of the, Now despite the correction higher of the pair, and it was characteristic how it tested the downward trend line and corrected lower once again, and is currently threatening the 1.1935. Should the bearish tendencies continue, we would expect a lower true. Note that the pair has been marking 1, 2, 3, 4, 5, 6. So the next stroke could be near the 1.1815 support level. That's the S2. However, to reach that level, the pair will have to break the 1.1935 first. On the flip side, and should the bulls take over, we may see the price action reversing direction, breaking the pre-mentioned downward trend line. We would require for a bullish outlook also the breaking of the 1.27 resistance line and may start aiming for the 1.2175 resistance level. A stabilization would imply practically a breaking of the downward trend line and the main body of the price action to remain between the R1 1.2070 and the S1 1.1935. Moving now to USD JPY, which maintained its sideways motion. There was little, if any, reaction practically on former Prime Minister Shinzo Abe's shooting. And on the other hand, we have to highlight here that JPY as a safe haven shows considerable resilience to the strengthening of the US dollar. It's characteristic that if we compare the movement of the euro against the US dollar with the pound against the US dollar and US dollar against JPY, we'll see that despite the European currencies, the euro and the pound, weakening against the greenback, the JPY remains stable in the past 3 weeks. And on the other hand, that tends to create some worries. The reason is practically that despite the stabilization occurred at rather high levels of USD JPY. We are talking now about 135, which implies a weakness on behalf of JPY, which could generate at some point the interest of BOJ or the Japanese government. But for the time being, we tend to maintain a bias for a sideways movement, given also that in the past 2 days, the Bollinger Bands, the upper and the lower Bollinger Band, have practically converged, and the price action seems to be revolving around the 20 moving average. Also, I would be highlighting the mid-level of 135.6. There's an axis around which the price action is rotating. It's also characteristic that there is an indicator below our 4-hour chart is rotating around the reading of 50, implying a rather indecisive market regarding the pair's next leg. Should the bulls take over, we may see the price action breaking the 136.75 and start aiming for the 138.80. And despite our prognosis for a possible continuation for the time being of the sideways movement, should a selling interest be displayed by the market, we would expect the price action to break the 134.45 and start actively aiming for the 133. Quite interesting here. Let's have a look now at USD Cad. USD Cad, which temporarily practically broke the 1.2970, however quickly resurfaced above it. In our opinion, that's, despite the slight break, it's another continuation, that another evidence or signal that for the continuation of the sideways movement between the pre-mentioned levels, and namely the R1 1.3075 and the S1 1.2970. Note that the RSI indicator below the 4-hour chart does not actively place some distance between itself and the reading of 50, also implying that the market has still to decide on the direction of the next leg for the pair. And overall, we can note that the pair has been moving in a sideways motion after its rise from the 9th of June up until the 15th of June, and has now stabilized in a wider sideways movement between the 1.3075 and the 1.2865. But in the past few days, since the 5th of July actually, the price action after steeper rise, a rally of USD Cad, has stabilized even at an even narrower range, that's namely the 1.3075 and the 1.2970. Should the bulls take over, I wouldn't be surprised to see the price action breaking the 1.3075, which provided resistance here, around, that was the 5th of July, and here, the 17th of June. While on the flip side, to the downside, we note the 1.2970. Should the bulls take over and break the 1.3075, we may see them start aiming for the 1.32. And I would like to reverse the levels, the touches of the levels practically, of the resistance lines, as there could be some bullish tendencies here. Yep, it is 130.75, the 1.32, and the 1.33. Okay. To the downside, I would be noting once again the 1.2970 here and here. While even lower, we have the 1.2865, which used to be a resistance line and has now been turned into a support line. Even lower, we note the 1.2760, providing support here and here, as well as resistance here and here. Okay, let's readjust. It's nice how the 1.2865 support line was practically reaffirmed once, twice by the recent price action, while the 1.2730 was reaffirmed here and here. So should a bearish outlook be expressed, we may see the price action breaking this 1.2970 and start actively aiming for the 1.2865. For the time being, we maintain a bias for sideways movement for the pair. Let's have a look now at the other commodity currency, that would be AUD USD. We have an Aussie which also seems to be moving in a sideways motion against the US dollar. And that sideways movement is between the 0.6850 and the 0.6760. There were some slight breaks to the upside mostly. However, overall, I would tend to maintain that we could make a readjustment here, just slightly higher, to catch the price action. And note how this practically realigns us here with the support level here. That would be the 0.6860. So we just moved it 10 pips higher. Here we go. On the other hand, I would note that we have an expectation for practically the sideways movement to be continued. By the way, I note in your comments that you are not able to see the RSI indicator because of the window showing myself. Let me deactivate. Yeah. So we have, I understand there's been some trouble with the sound. We activated the camera back on. Anyway, we have now the pair practically. We're talking about WTI's price, and this is on the commodities front. The commodity has been experiencing some bullish tendencies. Actually, it's a correction after a wide drop, which it had experienced around the 5th of July. And it's constantly testing the 101.25 resistance line. Now, the price action is expected to rise. Actually, for the time being, I would expect it to stabilize given the RSI indicator, which is running along the reading of 50, implying a rather indecisive market for the time being. Should the price action decide to rise further, we may see it breaking the 101.25, which served as a resistance line as well as a support line, and start to actively aiming for the 105.10, providing some sort of resistance here. On the flip side, should the bears take over, we may see the price action reversing course, breaking the 95.70, and start actively aiming for the 92.60. Once again, for the time being, we expect a stabilization, given that the RSI indicator is just at the reading of 50, implying a rather indecisive market as to the direction of the commodities next leg. Let's have a look at US stock markets now. We make a start with Dow Jones. Dow Jones, which has been testing practically the 31,345. You can see the slight drop, the slight correction lower after hitting that level. Yet bullish tendencies may be on the go, given that the RSI indicator below the 4-hour chart is between the readings of 50 and 70. It's actually right on 59 point something, almost in the middle. Should the bulls maintain control, we may see the price action breaking the 31,345 and start actively aiming for the 31,955. Should, on the other hand, the price action fail to clearly break the 31,345 and correct lower, yet remain just above the 30,625. Let me readjust this one because we had a double touch here. There you go. It's now being placed at 30,000. 440, and we should correct all the labels. Let's also correct this one. 29,000. $690. There you go. And we can see that should there be a stabilization, we may see practically the index starting to drop, given that it has failed to clearly break the 31,345 and start aiming for 30,440. It's a wide drop, I know it, but it's the main body of the price action of the index since the 28th of June has been between these two sides. So I would require clear breaking of the 31,345 and the index to start aiming for 31,955 before switching my bias for a sideways movement On the other hand, we have to note that the upward motion is rather strong, and the RSI indicator seems to be traveling about between the readings of 50 and 70. On the flip side, should the bears take over, which we don't see as probable, but it's still possible, we may see the price action dropping, breaking the 30,440 and start to actively aim for 29,690. Let's have a look now at S&P 500. S&P 500, which has risen, you can see that the rise is more intense in relation to Dow Jones. Let's make some corrections here. And we should go hunting for a new resistance line somewhere here. That would be practically the 4,200. 4,205. 4,205. That's it. In red, please. $4,075 being the second resistance line. First resistance line being the 3,950. First resistance line being the 3,855. Second support line being the 3,735. And the final support line being placed at 3,600. I would like to revisit the touch levels of the 3,600 once again. Let's make sure if it's valid or how valid it is. I haven't visited this chart for a while now. Okay, there's some valid, there's a resistance line. Could be a little bit higher. However, was tested also a support line here, 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 here. So it seems to be valid. We're going to be keeping it. So let's see the direction now. Okay, we see a correction lower of the index. However, the price action seems to remain above the upward trend line, which was initiated on the 5th of July. Let's make the recalibration here. It is. So, we tend to maintain a bias for sideways movement given that the price action of the index has been moving between the 3,950 and the 3,735. However, there seem to be some bullish tendencies for Dow Jones, yet we would require a clear breaking of the 3,950, and for the price action to start aiming for the 4,075. On the flip side, should the bears take over, we would require the price action of Dow Jones to break the 3,855, also clearly break the 3,735, and start actively aiming for the 3,600 to switch our bias for sideways movement in favor of a bearish outlook. Once again, though, please note the RSI indicator below the 4-hour chart is between the readings of 50 and 70. Actually, it's now at 59, 60. It's exactly in the middle. And could be implying some slight bullish tendencies. Also, I would note how the Bollinger Bands have started to widen, and they have also adopted a slight slope to the upward, especially the 20 moving average and the upper Bollinger Band, while the lower Bollinger Band seems about to follow yet remains low. That would be another indication of the bullish tendencies for the index. Okay, let's have a look now at US 100, even steeper. Note that we made this Dow Jones, slight upward motion, yet overall a clear sideways movement, S&P 500 steepening just a bit to the upside, and Nasdaq far more steeper to the upside, yet the correction is also possible as it has corrected a little bit lower. That was during today's early European session. Yep. Actually, that was during today's late Asian session. We tend to maintain a bullish outlook for the index. And let's make the readjustments necessary. And let's go hunting for a new resistance line. Okay. Being set at 13,555, despite being pretty wide, pretty far apart. I would like to make a correction also on the resistance and the support lines. Unless we correct this here, pretty low. Here. Now. Let's correct practically the support lines once again. $7,340. Let's make the adjustments. Could lower this to reflect it. And I would be lowering also this. Yep. That should be it. Let's make the readjustments of the labels. Let's readjust the second support line label at 11,340. And the third support line being placed at 11,030. Let's have a look at our resistance support lines. We made the supports. Now we're working practically on the resistance lines. And the second support line would be, the first support line would be at the 12,145. Second resistance line at 12,445. That would be practically 300 ticks higher. And the 12,000, let me correct this, and 30. So what have we done here? How do we actually read this chart? What we have done is, first and foremost, recalibrated the resistance and support lines. We found also practically the direction of the index. And now we're ready to make the description. The first element which we have to note would be practically the rise of the USD Index and the testing of the 12,145 resistance line. However, there was a correction lower subsequently. And I would add to that, though, that despite the correction lower, the upper movement does not seem to be interrupted, given that the short upward trend line is still valid. So we would expect some bullish tendencies here. On the other hand, we have to note here that the R1 is placing some considerable resistance for the index, as we have 1, 2 touches and subsequent corrections lower. So it would be probable to say that there are some difficulties in advancing higher for the index. Remember, we're always talking about the Nasdaq for our chart. Yet I would highlight that the RSI indicator is on the rise and is actually pretty near to the reading of 70, which tends to imply some bullish tendencies. Should the RSI indicator actually break above the reading of 70, we may see the price action correcting a little bit lower, as the price action of the RSI indicator would have reached overbought levels and could correct higher, like it did practically around the 25th, 26th of June. Here. Note how it broke above it and then corrected quite sharply lower. Nevertheless, should the R1 be broken, the 12,145, and should it be clearly broken, we may see the price action starting to approach practically the 12,445, which used to be a support line, with touches being once, twice, three here. And as the price action has moved decisively lower, is now practically reversed its role towards a resistance line, while the highest resistance line in our chart is currently the 12,930. And that's practically the, in our case, extreme bullish scenario resistance level. So we have decided A, the index seems to be having bullish tendencies, so we expect it to go higher. B, the first resistance line which is being placed in front of it is the 12,145, which practically had reversed the upward motion of the index a couple of times, with the latest one being yesterday. Should the R1 be broken, then the next possible target for the bulls would be placed at the 12,445, which used to be a successful support line, and given that the price action has moved decisively lower, is now transformed into a resistance line, while the ultimate bullish target would be the 12,930 R3, which was able to provide resistance around the beginning of June, that would be, to be more exact, at the 3rd of June. On the flip side, should the bears take over, we may see the price action initially breaking the drawn upward trend line. However, for a switch towards a bearish outlook, we would require a clear breaking of the 11,730 support line, which provided support once here, that was around the 6th of June, while it also provided resistance around the 15th of June and support once again around the 25th of May. Yes, that would be, sorry, the 6th of July. Now, should the S1 be broken and we see the price action starting to move decisively lower, then the next level would be the 11,340, which was aimed for practically on the 5th of July. Yet it was also tested substantially around the 30th of June, as well as the 20th, sorry, that would be the 30th of June, the 22nd of June, and even more intensely and expandedly around the 14th of June. To the downside, and should the price action hit the S3, we may see the price action nearing the 11,030, which provided considerable support on the 16th of June, where the price action moved from the highs of the 11,730 all the way down within one day, reaching the 11,030. Let's move now to fresh territories and European stock markets. Let's see how they behave today. So we have an upward movement, which is quite interesting. Let me readjust the levels just a bit. So we have the price action, which has started to rise, and that was since the 5th of July, when it actually aimed for the 12,340. It rose, breaking the 12,615 and is actually aiming for the 12,925 resistance line, which has provided resistance here, as well as support here and here. Given that the downward trend line seems to have been broken, I would, a stabilization initially expect the German DAX to show some kind of stabilization initially, possibly between the 12,925 and 12,615. Should the bulls take over, that would allow us to draw a new trend line, this time to the upwards, which would be pushing practically the price action higher, breaking the 12,925 and start actively aiming for 13,360. To the downside, and should the bears regain control, we may see the price action of DAX breaking the S1, 12,615, which provided considerable support here. That would be around the, let me have a look, 30th of June. But even lower, we note the 12,340, which was aimed for around the 5th of July. Lower than that, we note the 11,960 support level. Now you can see that some of you guys are wanting to see Japanese index to see if there has been any movement by Abe's, Shinzo Abe's shooting. Nope. Okay, practically what happened was that the upward momentum which was presented for the Japanese index was ended today, was halted. Would have to make substantial readjustments though here. There you go. But there doesn't seem to be any much movement. I would like to see how Monday will be opening and to see exactly whether there's going to be increased volatility for the Japanese index. That should sum it up for us here in IronFX. Best wishes for solid trading and a great weekend. The past week shook the markets with recession worries expanding and covering also European countries. As a turbulent week is about to end, we open a window at what next week has in store for the markets. On the monetary front, We highlight the interest rate decision of Canada's BOC on Wednesday's American session, while before that, on the same day, we also note from New Zealand RBNZ's interest rate decision in the Asian session. Also, a number of policymakers are scheduled to make statements and could sway the market's opinion throughout the week. As for financial releases, we make an early start tomorrow Saturday as China's inflation data for June are due out. And on Monday's Asian session, we note the release of Japan's machinery orders for May and Norway's CPI rates for June. On Tuesday, we get Japan's corporate goods prices for June, and from Germany, we highlight the release of July's CEF indicators, while on Wednesday, we highlight China's trade data for June in the Asian session, UK's GDP and manufacturing output growth rates for May, and France's and Germany's final HICP rates for June, while the main release for the week could be the US CPI rates for June in the American session. In a packed Thursday, we get Australia's employment data, Sweden's CPI rates, and the US PPI rates, all of the pre-mentioned releases being for June. While from the US, we also get the weekly initial jobless claims figure, and from Canada, the manufacturing sales for May. Finally, on Friday, we highlight the release of China's GDP rate for Q2, as well as the industrial output growth rate for June, while from the US, we get the retail sales and industrial output growth rates for June, as well as the preliminary University of Michigan consumer sentiment for July. Maybe the most characteristic move in the FX market for the past few days has been the strengthening of the US dollar, with the USD Index reaching practically record highs before correcting a bit lower. The greenback maintained the initiative over other currencies, as was evident in the market's moves since Monday. Fundamentally, we highlight market worries for a possible recession in the US economy that tended to generate safe haven inflows for the greenback, strengthening it considerably. We maintain the view that should market worries about the issue intensify, we may see the US dollar rising further, albeit the pace was moderated somewhat on Wednesday and even more on Thursday. On the other hand, we must note that US stock markets seem about to edge a bit higher, with all three US equities indexes, the Dow Jones, Nasdaq, and S&P 500, about to end the week in the greens, which could imply that the market may have started to digest the negative outlook for the US economy somewhat. Please note, though, that the US employment report for June is still to be released, and depending on the actual rates and figures, we may have a distortion of the picture described before. On the monetary front, the decisiveness of the Fed to curb inflationary pressures in the US economy by raising the interest rates further was characteristic. It's indicative that the bank's June meeting minutes practically reaffirmed the market's expectations, as the bank stated that there is a considerable probability of 75 basis point moves at both the June and July meetings, given the release of the last CPI rates. Overall, the bank's hawkishness was evident in the document, which allowed USD bulls to advance further. Should US CPI rates for June accelerate further, we may see the pressure increasing on the Fed to tighten its monetary policy at a faster pace. We note that the release is on Wednesday and could present increased volatility for the US dollar. On Thursday, we get the weekly initial jobless claims figure, as well as the US PPI rates for June. And finally, on Friday, we get the retail sales growth rate for June, the industrial production also for June, and the preliminary University of Michigan consumer sentiment for July. The pound is about to end the week lower against the US dollar, as well as against the JPY, while it strengthens against the already weakening euro and the CHF. We must note that pound traders are even more troubled, as political instability could be added to the existing worries for the UK economic outlook and the possibility of stagflation arising. The resignation of the Chancellor of the Exchequer, Rishi Sunak, and Health Secretary Javid intensified the pressures on UK Prime Minister Johnson to resign. It should be noted that Tory Parliament members were in open revolt against the PM, while ministers were stating that Johnson's time is up, and all of that combined practically forced Johnson to resign. Overall, the situation in the UK on a macroeconomic and political level remains uncertain at best, and it could weigh on the pound over the coming days should the market seek a relative safety. It's characteristic on the monetary front that the Bank of England warned on Tuesday of the darkened economic prospects for the UK and is reported to have asked banks to increase capital reserves. BOE Governor Bailey was reported stating that the global economic outlook has deteriorated markedly. Global financial conditions as a whole have tightened significantly. Also, BOE's chief economist Hugh Pill highlighted that he expects no growth for the UK economy, yet he would be willing to back rapid interest rate hikes by the bank in order to fight inflationary pressures in the UK economy. Given the worries for UK's economic growth, we tend to highlight on Thursday UK's GDP rates for May, as well as the manufacturing output growth rate for the same month. JPY seems about to end the week a bit weaker against the US dollar, yet the pair's range of prices remains in the same spectrum as for the past 3 weeks. It should be noted though that the Japanese currency is about to end the week stronger against the euro and GBP, so it's not like JPY bears are all over the place, quite the contrary. Given the safe haven status of JPY for international investors, we see a resilience of the Japanese currency as JPY resisted the strengthening of the USD, and given also that market worries for a possible global economic slowdown intensify. We would expect the yen's status as a safe haven to continue to play a key role in its direction next week. On the other hand, more and more analysts are highlighting how BOJ's dovish stance could weigh on the Japanese currency. The question on whether the bank will have to abandon its yield curve control policy in the coming months seems to be intensifying. At the same time, market analysts continue to note the possibility of a market intervention in order to defend the yen, especially against the US dollar, as USD JPY seems to be stabilizing at rather high levels, implying a continuation of JPY's weakness. Please note that Japanese authorities have not intervened in the market since 1998. On a macroeconomic level, Japan remains worrisome, maybe not in the same degree as the Eurozone and the UK economy, but still, the drop suffered by the Tangan Big Manufacturers Index was characteristic of the slowdown of the expansion of economic activity, while Tokyo's core CPI rate continued to accelerate despite a tick down by the headline rate. Also, the narrowing of the current account surplus tended to imply that the Japanese economy benefited less from the international payment system for May, despite JPY actually strengthening for the whole month, while the contraction of all household spending month on month for May darkens the outlook on the consumption sector for the Japanese economy. On a more positive note though, the Japanese employment market remains tight, even for Japanese standards. In the coming week, we expect fundamentals to maintain control over the yen, given the low number of high-impact financial releases expected. Yet, we would like to note the release of the machinery orders growth rate for May on Monday, while on Tuesday we get the corporate goods prices growth rate for June. Also, we would like to express our worries for former PM Shinzo Abe's health, who has been shot during today's Asian session, as his condition is uncertain, and for the time being, the event does not seem to have a material impact in the Japanese markets, yet that could potentially change on Monday's opening. Common currency seems about to end the week weaker against the US dollar, but also the GBP and JPY in a sign of a broader weakness. Our worries on the macroeconomic level intensified in the past few weeks, and the area may not be able to avoid a recession. It should be noted that the European economy is reported to have suffered a rise of natural gas prices, a key fuel for the area, in the past 2 weeks, which could make the situation even worse, as higher energy prices could slow down or even contract economic activity. At the same time, we highlight that Germany's trade surplus has turned to a deficit for the first time in 31 years. The drop may prove to be temporary for Eurozone's economic powerhouse and top exporter, yet is still indicative of the negative situation for the Eurozone. Overall, the possibility of a recession may continue to weigh on the common currency at a fundamental level and may alter ECB's intentions to tighten its monetary policy. At the same time, the market's worries for a possible divergence of yields for the bonds issued by each Eurozone member is intensifying. ECB President Lagarde had mentioned in the past weeks that the bank will intensify its efforts for the financing instrument that would at least reduce such a divergence, yet there seem to be issues. It's characteristic that the chief of Germany's Bundesbank, Joachim Nagel, was reported stating that it will be virtually impossible to decide if a divergence in borrowing costs between Eurozone countries is justified. Overall, should there be hesitation for the extent of the tightening of ECB's monetary policy, we may see the common currency weakening. Thus, we would note any statements planned to be made by ECB policymakers in the coming week. As for financial releases, we note on Tuesday the release of Germany's 7 indicators for July, while on Wednesday we get Germany's and France's final HICP rates for June. This is about to end the week near the same levels it began, if not slightly stronger against the US dollar. On a fundamental level, the commodity currency was successful to resist the overall gloominess in the global economic outlook, at least temporarily. On the monetary front, it should be noted that, as was widely expected, the Reserve Bank of Australia delivered a 50 basis points rate hike during Tuesday's Asian session, yet the market seemed to be somewhat disappointed, as they also retreated against the US dollar at the time of the release. The bank maintained a hawkish tone in Governor Lowe's accompanying statement, yet the market may have priced in an even more aggressive stance on behalf of the bank to curb inflationary pressures in the Australian economy. Nevertheless, the bank maintained its optimism, stating that the Australian economy remains resilient and the labour market is tighter than it has been for some time, while also mentioned the high inflation. On a more fundamental level, we expect the commodity currency, though, to remain sensitive to the market mood in relation to the global economic outlook, being especially sensitive to the outlook of its close trading partner, China. That's why we highlight the release of China's trade data for June on Wednesday with Aussie traders, focusing on the import growth rate as it relates directly also to Australian exporters of raw material. On Friday, we highlight the release of China's GDP rate for Q2, as well as the industrial output growth rate for June, and a possible acceleration of these rates could imply some support for the AUD, as it would imply once again a greater degree of exports from Australia. Finally, from Australia, we note the release of June's employment data on Thursday, and should a tightening of the Australian employment market be evident, we may see AUD getting some support. The loonie is about to end the week lower against the US dollar, yet we note that the US and Canadian employment data are still to be released later today and could distort this picture. It should be noted that the Cad weakened also partially as a result of the drop of oil prices. It should be noted that the market worries for a possible economic recession in the US and a global economic slowdown also stoked fears for a possible weakening of the demand side of the commodity. We should note on the flip side that should there be substantial worries for the adequacy of oil production levels, we may see oil prices rising once again. Despite a relative stabilization of WTI prices on Thursday, should oil prices renew their drop, we may see the CAD being adversely affected, as Canada is a major oil-producing economy. On the monetary front, we note the release of BOC's interest rate decision on Wednesday. The market seems to be increasingly pricing in the possibility of an oversized rate hike at 75 basis points, and CAD OIS imply a probability of 75% for such a scenario to materialize currently. Overall, given the high inflationary pressures and the rather tight employment market in the Canadian economy, we may see the bank actually delivering such a rate hike. The main issue which comes into play, though, would be the red-hot housing market of Canada and the percentage of possible over-indebted Canadian households, which may be advising some degree of caution for the bank. As for financial releases, we have a low number of high-impact financial releases in the coming week. Hence, we would expect fundamentals to take over. Yet we would still like to note the release of the manufacturing sales and wholesale trade growth rates on Thursday and Friday respectively, with both releases being related to May. As a closing comment, we expect the US dollar to maintain its dominance in the coming week, yet could relent some of the initiative to other currencies as well. Yet the frequency and gravity of the US financial releases and developments in the US economy are expected to maintain the USD as the main market mover in the FX market. Nevertheless, during the week we expect other currencies at certain points to take the initiative and act independently as releases either of financial data like Australia's employment data and monetary policy decisions like BOC's interest rate decision could generate market interest for other currencies, allowing them to act independently, creating thus a blend of trading opportunities. Also, influences could be exercised in the FX market from other markets, such as the commodities market and the stock markets. On the monetary front, we would like to make also a small comment for the Reserve Bank of New Zealand's interest rate decision on Wednesday's Asian session. The bank is widely expected to hike rates given the high inflationary pressures and the relatively tight employment market in New Zealand, and it's characteristic that the market has fully priced in currently the possibility of a 25 basis points rate hike, according to NZD-OIS. Hence, for the Kiwi to get a substantial boost, the market may require something more than a mere rate hike. Should the market proceed with a wider rate hike, for example a 50 basis points rate hike, and also issue a clearly hawkish forward guidance, we may see NZD bulls taking over.
Hello traders! Today I will be talking about a few important trading tips. Funding has always been a major concern for traders. Our best advice will be to trade on money you can afford. Never invest money you need for day-to-day needs. For example, never take from your rent money to invest. Set some funds aside, that way you can avoid additional stress during trading and perform better. From there on, assess how much capital you're willing to risk on each trade. Analysts suggest that many successful day traders risk less than 1% to 2% of their account per trade. That trading tactic would allow you also to be able to open new positions should the chance arise, as the total of your capital will not be tied up. However, be careful not to fall in the trap of overtrading. Set aside a surplus amount of funds you can trade with and you're prepared to lose, and always remember, it may or may not happen. Who you want to be as a trader and who you are could be different. For example, some traders aim for a home run. That could be a large profit that could take a month or two to be realized. On the other hand, you have traders that are willing to take the same risk to do that same profit in a day or a matter of hours. Even though either scenario is possible, attempting to make a lot of money on a daily basis could impact your well-being, as the stress levels are unbearable. You have to do it one step at a time. Take your time with your trading, but be consistent. Some days choose to stay out and just observe the market and try to learn something new through your demo account. Your goal must be to stay in the game for this long term. This is not a sprint, this is a marathon. You have to prepare yourself for certain things to happen. So keep going at it, whatever the case, just keep hammering away. We always question a trader's ability to be a consistent profit maker when overtrading. Some traders believe that when they trade a lot, there are more chances of making money. From our point of view, that statement could be misleading, as the good trading ideas usually require very experienced traders in order to be enacted upon. Good trading ideas usually have a reason behind them. The reason stands out so clearly that you can't help it but place the trade. However, to maximize your profits, you will need to execute the trade as fast as possible. Financial markets cannot tolerate hesitation. The moment will never be perfect and there will always be something in the way, but your eagerness to trade will make it possible.